In retrospect, the volatility of palm oil price has never been greater in the commodity market. It was not only because it survived from a V-shaped reversal during last year, but also as more and more money rushed into the commodity market, a more fluctuated price curve is inevitable. Most of the commodity researchers have reached an absolute consensus on this issue regarding how palm oil price will act in the near future. Based on our analysis, the midterm Malaysia palm oil inventory may fall down to 1.3 million tons. Such optimistic outlook would normally lead investors to keep buying. This phenomenon is significantly noticeable for researchers and investors since it looks just like the earlier market. The palm market is falling into a bubble. Is it actually happening? Part 1. Positive factors for the recovery of palm oil production in 2021. The deviation of Southeast Asia's production in 2020 has played an important role in destocking palm oil in the production area this year. Looking forward to 2021, multiple factors are favorable for the recovery of palm oil production. Number 1. Sufficient rainfall boosts palm oil production. In 2020, the rainfall in Malaysia and Indonesia is close to the high level of the same period in the past years. The rainfall recovery period in Malaysia started this year from March to April. Also since last December, the rainfall in Indonesia has been improved significantly. Sufficient rain precipitation should help to shield the production from the deficit of inventory in the long run. However, at the moment, inventory and supply risks still exist in the palm oil market. Yet many investor analysts are still holding positive views towards the palm oil market despite all the potential risks involved. A better production in the future resulting from the sufficient amount of rain will be reviewed in 8 to 10 months. Therefore, Indonesia palm oil production has already in a recovery phase since last year in August, and Malaysia should be recovered by December. On another side, La Nina has entered a medium intensity state. It is expected that the potential of great palm oil production in 2021 will be better guaranteed. Number 2. Potential production would be enhanced by improved labor force. This year's output in Southeast Asia is also affected by labor shortage and insufficient operation, especially in Malaysia. The COVID-19 pandemic has forced Malaysia close its border at the beginning of last year, making its labor situation even worse. However, once the Malaysia's border is reopened, the labor shortage situation will be constructively mitigated. Number 3. Profit motivates strong fertilization and maintenance. In 2019 and the second half of 2020, along with the sharp rise in palm oil prices, plantation profit is also rising. Palm plantation has increased farmers' investment in the management and maintenance of their gardens, which is expected to have a positive impact on next year's production. And replanting of old trees will also benefit the improvement of palm oil yields in the long run. According to the calculation of annual replanting rate of 1 to 2%, the higher replanting rate in the second half of this year has a limited impact on the short-term production. On the contrary, the positive replanting during 2016 to 2018 will begin to show the effect of increasing yield. Number 4. The turning point of Indonesia's production increase cycle may come. As far as palm oil yield is concerned, the bigger internal factor is the tree age, and the overall tree age structure will directly affect the amount of palm oil production. Although both countries are in Southeast Asia, palm trees in Malaysia and Indonesia have different age structures and palm oil production rate. Malaysia has started the oil palm plantation at an early time. The annual palm oil production in Malaysia has been hovering around 19 to 20 million tons, while the per unit yield has dropped in a steep downtrend, which reflects the impact of aging tree age structure. Since the late 1990s, the palm planting area in Indonesia began to grow on a large scale, benefiting from the increasing of planting land and the young-aged palm trees. However, After the forest fire in 2015, the growth rate of oil palm plantation has slowed down. The potential growth of palm oil production in Indonesia will mainly depend on the growth of the per unit yield. The production in Malaysia is about to slump down because the average age of Malaysian oil palm trees is around 15 years. By contrast, the age of those trees in Indonesia is ranged from 10.5 to 14 years. After production cutback in 2020, palm oil production in Southeast Asia will recover in 2021. The growing tree rings of oil palm trees indicate the reduction in Malaysia's production and the turning point of Indonesia's booming production. The long-term palm oil price will benefit from the slowdown of production growth. Part 2. Recovering demand for edible and industrial palm oil. As the COVID-19 vaccine has been promoted worldwide, the demand of palm oil for food and biodiesel is expected to emerge. Despite the recovering yield, the stocking reserves of palm tree oil won't be a concern for this year. Undoubtedly, the demand will provide strong support for the price. Number 1. Food demand is stably recovering. The COVID-19 pandemic has impacted the consumption of palm oil, which palm oil is frequently used for medium-sized catering. Soybean oil dominates in the Chinese market due to its outstanding performance-cost ratio compared to palm oil. Although price difference between soybean oil and palm oil and the performance-price ratio of soybean oil has been significantly weakened, soybean oil is still hard to be replaced. Let's take a look at India. After the recent conflict between India and Malaysia, India has cut off the import from Malaysia, but it cannot completely give up the high performance price ratio of palm oil. In 2019 to 2020, India's refined palm oil and crude palm oil import still counts for 54% among all types of oil. In terms of Indian domestic edible vegetable oil stocks, at the end of November, less than 150 million ton inventory suggested that there's a big space for later replenishment. In this case, a great opportunity will be given for importing crude palm oil. Number 2. Increasing industrial demand. Indonesia's biodiesel production in 2020 is overestimated, mainly due to the decrease in blending caused by the decline in diesel demand. On December 22nd, the Indonesia Ministry of Energy issued an announcement stating that the Indonesia biodiesel blending quota for 2021 is 9.2 million kiloliters. If we consider the recovery of PME export next year, we can expect the growth in demand for both palm oil and diesel fuel in Indonesia. The sharp divergence of the trend of vegetable oil and crude oil this year has greatly widened the POGO price gap, which not only severely suppressed Indonesia's biodiesel exports, but also drained the Indonesia Diesel Fuel Subsidy Fund. Therefore, Indonesia will slow down the pace of launching the B40 next year and will adjust the export levy of palm oil products to supplement the funding of the Firewood Subsidy Fund. Since last December, Indonesia has adopted the new export levy standard. Consider the current high palm oil price. The levy of new standard has increased much more than the level in previous years. Is it a guarantee that the B30 plan will be implemented? Let's take a look at the following content. Indonesia will produce biodiesel for about 9.2 million kiloliters in 2021. Table 2 expresses the assumption for calculating whether the subsidy fund can be fully covered by the new export levy standard. It is easy to find that when the average palm oil price and the levy is higher, there will be more subsidy coverage of roast diesel and vice versa. According to the current target, a fund gap may occur. But the assessment is not entirely accurate. With the vaccination of COVID-19, the demand of gross oil will be increased in 2021. And when the biodiesel policy is declared in Indonesia, the demand of gross diesel oil will also be recovered in 2021. Part 3. Production inventory reconstruction may still making a slow progress. Due to the aging palm trees, we estimate that the production of Malaysia's palm oil in 2020 and 2021 will be around 19.5 to 20 million tons. On another side, the oil yield will be higher in Indonesia considering good weather condition and relatively young trees. As the tariff has adjusted, India is more inclined to choose gross palm oil this year. With the adjustment of Indonesia's export levy on palm oil products and the release of the blending quota of 2.2 million liters this year, the demand of biodiesel from palm oil will achieve an year-on-year growth, which also stimulate palm oil demand to increase. In terms of quantity, even if the balance sheet shows a higher increase in the production over the consumption, the ending inventory repair on the palm oil balance sheet is still quite mild, which will limit the downside in 2021. According to the past performance, Malaysia palm production is seasonally reduced from October to February, and the destocking period usually lasts from the end of the year to March or May in next year. As the inventory has fallen to a record low level in late November, and the destocking will continue in the coming months, it is expected that a strong support for palm oil price will be provided in the first quarter of this year. For Indonesia, the seasonal pattern of production and the total inventory are broadly in line with Malaysia. When the production is rising to a super high level in October, the inventory will fall in the coming months. But in the short term, the high export surcharge and tariffs cannot be ignored. When the price gap is repaired completely, there will be a supply pressure from the production area, and that will be a turning point of palm oil price. To be noticed, the levy will somehow contribute to the rise and the fall of the prices. Part 4. Conclusion. A prediction of the price range of palm oil for the main future contract, 5,700 yuan to 7,700 yuan, is estimated for 2021. Unilateral strategy of buying long is reserved before the price retracement in February. After the first quarter, according to the recovery, find a chance to sell short at a high price. The following arbitrage strategies can be referenced. The first one is keep long position of palm oil before March 2021, and then build the hedge position of palm and soybean meal in the end of the first quarter of 2021. The last one is sell short of May and September price gap at a relatively high price. Thanks for watching or listening to CFC International Agriculture Commodity Report channel. If you enjoy the content and want to see more of our reports for international investors, hit the subscribe button, and we will update you with the latest commodity news and trade strategies. And if you have something to say, please leave a comment. Thank you.